Hello Business Essentials, this will be your second video on accounting. We're going to look at the rest of these terms today, and then we're also going to look at how to record some transactions, and then you're going to get to practice yourself. I saved the first part, this information up here, so it'd be a little easier just to get you exposed to some of the information. Now we're going to get a little more in depth. We're going to try and do some things with this information, okay? So today what we're going to do is we're going to look at these terms first. The first one being generally accepted accounting principles. These are things that accounting requires. They are principles practiced that you all must follow. You'll find out what these principles are as if you were going to take accounting, but I'm going to leave them to be a mystery for now because they're really not essential for us going forward. Just know that there is a certain set of rules or principles applied, and there's a big old thick book of them. In fact, actually it's now a digital thing, so you don't have to carry the book around, but it's pretty complex and pretty in-depth. The second thing is property. This is anything of value that is owned or controlled. And you can think of property in many ways in your own life. You have a lot of property yourselves, and ultimately what property then becomes is what the next thing is, which is assets, which we talked a little bit about yesterday. But just to give you a little bit more information, property or other items of value owned by a business. And there are two types. There are current assets and there are fixed assets. Current assets are things that are pretty easily converted to cash. That means they have a high liquidity. If something is very liquid, it can be converted to cash very easily. And one of the examples of that is accounts receivable. Accounts receivable, that's money that is owed to you. Like you give somebody some credit and now they're going to pay you later. That's accounts receivable, meaning you'll receive it later. The next one is a fixed asset. These are things that are very big in size generally and don't move a lot, meaning they're fixed. They're usually going to stay in one place for a considerable amount of time. And so the examples here are equipment and buildings. The next item is equity, and we talked about this a lot yesterday too. This is the present value of an asset and the claims against it. So if I own Boardwalk and I'm going to buy it for $400, I'm going to repeat this from yesterday. I'm going to buy Boardwalk for $400, but let's say I don't want to spend all my money. Let's say I only want to pay $200 of the $400 that I owe for Boardwalk, but I'm ultimately going to buy it later and I'm going to take out a loan. Well, that's where liabilities comes into play too. So the equity I would have in that Boardwalk would be $200 because I'm going to pay cash for $200 of the $400 that I owe. The other $200 would be located in liabilities, and so my total asset value would still be $400. Boardwalk is still worth $400, but I only control $200 of it as a part of my equity or my capital. The other $200 would be in liabilities, and I would owe that eventually. Could you do that in this monopoly or these monopoly exercises? Sure. And you could do it for any number of things that you buy. You just have to be careful about the amount of debt you take on versus the amount of cash and assets that you have that represent that debt. You want to be able to account for all your debt that you have with your assets and your cash. Which cash is an asset, but it's a very liquid asset. So I kind of hold it separate from like property, supplies, insurance, and a bunch of other things. So keep that in mind. You can use this to your advantage, but it can also be a detriment if you don't keep track of it. The account that is used to keep track of liabilities is called accounts payable, kind of the opposite of accounts receivable. Up here at the top, accounts payable is one that you owe people money. It represents the people you owe money to. The last thing down here is owner's equity, and this is the owner's claims to the assets of the business. So we talked about just equity here being the present value. Well, this is actually your equity of the asset. So our equity in that example I gave of Boardwalk would be $200, and then there would be a liability of $200. So let's go down here and look at what this all means. The big picture is the accounting equation. Assets equals liabilities plus owner's equity. And this always has to balance. If your equation doesn't balance, then you are not accounting right. And now we're going to go complete an exercise relative to Monopoly, and then I'm going to ask you to do your own. So the next thing I want you to do is go to the link out in your sub-lesson plan, and I'm going to show that to you. I'm going to pause and post it, and then I'll show you where it's at. Okay, I'm going to pause. Okay, I'm back. This is my sub-lesson plan. I've now added at 10:11 the financial exercises, so you can go get those and make a copy for yourself. I'll show you my copy. It's going to be right here. I'm going to hit done because I shared it. And the first thing that you're going to come to is how to enter transactions and keep your equation, your accounting equation, in balance. So if you look at my spreadsheet, and you can use this for yourself, I highly recommend you copy and paste when you do your own, and I'm going to have you do your own on this same page. You'll see that we have assets equals liabilities plus owner's equity. They're all in their own little cells. I merged and centered assets to come out to overhead or be an overlying label, if you will, for cash, property, and a get out of jail free card. The liabilities that you could possibly use would be Monopoly Bank, and that's AP Monopoly Bank for accounts payable Monopoly Bank. And then I'm going to use my last name in capital as my owner's equity type of account. So I've put together a few transactions here, and they correspond with the entries I've put over here. So let me explain, and I'm going to color code these now so you can get an idea of which goes where. So orange, this is the first one, and you always start with your initial investment. We invested, in this case, $1,500 into our Monopoly business, so it will be represented by this piece of information right here. And again, I'm going to make that orange to correspond. Then we'll come down to the second one as we're playing the game, let's say, and we're trying to keep our equation in balance. It's going to be red. We purchased Reading Railroad. Well, I know that Reading Railroad, looking at the board, costs $200. And in order to keep my equation in balance, I have to account for $200 in two different places. Every transaction affects at least two accounts. It could be more. In Monopoly, you're probably not going to have very many more, but it could be. If you take accounting, we'll talk more about compound entries. So in this example, I now have a negative $200 to cash because I'm spending my cash, but I'm gaining property. So I'm really trading one asset for another. So yes, I'm losing cash, but I'm gaining property. My capital will not change. So as you see it move down, this is a total line, and I'm going to bold that so you know that it's a total line. This is where I have found my totals after my transaction has occurred. So after my initial investment, I spent $200. That means my cash is going to go down to $1,300. My property is going to go up $200, and they still both equal $1,500. So my assets equals my liabilities plus my owner's equity. And that's how you keep your accounting equation in balance. Not very complicated, not very difficult. Okay? There'll be some more transactions we'll talk about as we go along that will make this a little more challenging, but it shouldn't be too bad. So as we move on down to the next transaction, we received rent from sales, from railroad sales or railroad rent, and rent for railroads is $25. Let's make this blue. Let's make this blue. And you'll notice I brought down my total again, so I'm going to bold that. And now we're at $1,325, $200, and then notice my capital went up because revenue is recognized under the capital account. So revenue increases the capital account. Likewise, or in the opposite of, if you have an expense, that's going to go against your capital. Let's look at the next transaction. On the next transaction, we purchased St. Charles Place. We'll make this, maybe we find a purple or something. Purple. All right. We purchased St. Charles Place for $140, and we'll make that purple as well. And then I made my adjustments accordingly, and so my new value for cash, I spent cash to buy that, is $11.85. My property value now goes up because I have two properties totaling $340, and then I also have $1,525 in total capital. That did not change, only my assets changed. I traded one asset for another, cash for a property. So this over here, nothing happened. We didn't have an expense and we didn't have a revenue, so nothing happened to capital. All right, I'm going to pause and I'm going to fill out the rest of these transactions with color codes, and then I'll come back. Okay, so I went through and I color coded all my transactions over here on the side, and you can kind of see what resembles what, and I also put out on the side here what they are, like type of transaction wise. So an expense, revenue, increase in capital, expense, paid cash for Boardwalk, and Pasco collected $200. Okay, so hopefully you have a gist for that. At the end, when you total your assets, the 1469, 740, and 50, it should equal 2259. On the outside, you should see if there's a formula. You should put a formula out here to see if they equal. So what I like to do, this actually says 2259 for me to check if my three assets equal that. That's one way to do it. You could also do an equals this plus your other asset plus your other asset minus your total capital in this case. You may have liabilities sometime down the road that would also be included, but for now, let's keep it simple. We'll hit enter, and guess what? There's nothing there. It's zero. Why is it zero? Because it's balanced. That's what you're looking for. Now I'm going to set it back because I actually like the other way better, because I like to use this number to see what percentage of my assets represents my capital. So cash currently represents 63%, property represents 32%, and my get out of jail free card represents 2% of my capital. Alright, so if you wanted a breakdown of some of your asset percentages, that's basically what your business is worth, cash and property wise. I'm going to stop there, and we're going to go to the next thing that you need to do, and you need to pause for a minute. What I'd like you to do after you pause is I want you to come up with your own 10 transactions that might happen to you in Monopoly. I want you to come up with your own. Don't play the game, just come up with your own 10 transactions. Use this form and practice recording your own transactions. I expect to see those on your own accounting form here using this spreadsheet format. Okay, just add your own at the bottom. You can right click on the entering transactions option and just hit duplicate, erase what I have, and plug your own in. Okay, it's very, very easy. So do that now. I'm going to pause, and you can work on that. Make it look very similar, if not exactly like mine, but with different numbers, different transactions. Alright, you may begin. Alright, your next exercise is going to involve completing the equation. Alright, so just practicing finishing the equation. What I'm eventually going to do is I'm going to erase all these numbers that are in red here, that are your answers, and I'm going to make you come in and find the answers yourselves. So one of the things I can do very easily is get rid of these items here in red. And obviously you could stop the video and see these answers if you wanted to. But what if I start changing things? This will make things incredibly different. And let's see, I think we'll make this one -200. And we'll leave this one blank. We'll see if you guys can come up with an answer for that. Okay, so what I'd like you to do now is fill out the form here. And when you're filling out the form, obviously you need to complete the equation. The easiest way to do this is to put in a formula. If you know it's $1,000 over here, well, what plus -$200 equals 1,000? Well, in this case, it'd be 1,200. Okay? Or you could do equals this. Are we going to add or subtract? What do you think? I'll let you decide. But you can use your equals formula. I don't want to give that answer away. I want you to come up with it for yourself to fill out the rest of these if you want to. Alright, so that's your next assignment. Fill out these pieces of information, fill out this set of transactions, and then move on to the next thing. I'm going to pause, give you some time, and then I'll come back with the next one. Okay, this is your last assignment for today. Very simple. You must classify the accounts. So is house an asset, a liability, or known as equity? And go down the line and just put an X where you believe houses belongs. And I'm going to give you that one. It's an asset. So you go around and put the rest of the X's in. And that is your last assignment for today. I wish you the best of luck. Next time you hear from me, I'll be reporting